So welcome everybody from HTGF, the whole team, Guido and myself. And I want to reflect a little bit on the Corona crisis. We are 7 months into the Corona crisis. And the Corona crisis is very special, something we haven't experienced before. And of course, with damage in the economy, damage in the portfolio, but also with lots of opportunity. And we would love to see you real, in person, but it's not possible. So we're not complaining. So what we did, not one family day, 2 family days. So we took the opportunity to create an extra online format. The first one was in the end of May. The second one is today. Looking at the big picture of the Corona crisis, what happened? A lot of data and some really interesting conclusions. It was a historical collapse of the economy, not only in Germany, of course, worldwide. And what we see on this slide is the change of the GDP in Germany from one quarter to the next quarter. So the second quarter in Germany was minus 10%, not to the year before, but to the previous quarter, so a lot. But then also we see on the slide an expected increase of the economy significantly starting Q3. If you look at the business climate and the expectations, a very, very sharp drop, of course, with the lockdown. Now, the expectations were very, very negative. But then, if you look very closely at the expectations, 97.7, higher than most of the year 2019. So we expect in the general economy that it's going to be much better than 2019. So that's the opportunity. What happened? The prices fell. Of course, demand collapsed, prices going down, no inflation. In general, that's very good because our money buys more, but it's going to trigger some government reactions. So, collapse of the economy, but very positive expectations and no inflation. What was the government reaction? What was the business and consumer reaction? What was the financial market reactions, and what are the conclusions from that? Government reaction, worldwide, the government started to spend a lot of money. On Friday, a 2.1 trillion government package was approved in the US. 2.1 trillion, that's like $2,100 billion, and that's the second package. And even in Germany very prudent, the black zero, the schwarze Null, German government is spending a lot, also on startups, and that has very, very positive effects. But there's more than the fiscal policy, there's the monetary policy. And all the reserve banks across the world started to print a lot of money. We see the ECB balance sheet, and it's almost 2,000 billion euros that has been injected in the economy to keep the monetary system flowing and working, and to stimulate the economy. And on a worldwide scale, if you look at the balance sheets of the Federal Reserve in the US, the Bank of Japan and ECB, it's more than $6,000 billion that have been injected in the economy. And this is really important because it has some really, really interesting consequences, and the expectation really is that this will continue. There will be more money injected in the worldwide economies. How did consumers and businesses react? Well, in Germany and worldwide actually, also in the US, the savings rate jumped up significantly. And it's very logical because we couldn't spend any more money, we couldn't go on vacation, we couldn't go on restaurants, and right now with the second wave happening a little bit in Europe, we're not going on vacation, we're delaying spendings, there's uncertainty. So the saving rate really increased. And that was the money that was lacking, of course, as demand in the economy. What also happened is that the retail deposits, where do we put the money? We put it in the bank accounts. And if you look closely to the chart, we see a significant, steeper increase in 2020 with the money that was being put in banks. But it's not only being put in the banks, the money, the extra money, it's also withdrawn from the banks. Here we see the ECB notes in circulation, and there we see a significant increase in 2020. So people are taking their money outside of the bank, they're hoarding cash. How did financial markets react? Well, if we look at the world stock market cap, we see the very, very steep decrease in March. Expectation collapsed, everybody was afraid, people sold their stock. But then very, very quickly, the stock markets on a worldwide scale jumped back up to the same level. That's all the stocks in the whole world. So sharp decrease, sharp increase, same level. If we look at the leading tech stocks, the FANGmen, the Googles and Amazon and Apple, we see a decrease in March, but a much, much stronger increase, significantly stronger. So, on average, the stocks stayed the same, but the leading tech stocks increased a lot. And then we, of course, know there was a huge group of stocks that didn't increase, like the airlines and hotels, and of course, many businesses, the banks, and the tech stocks went up significantly. And the third slide really shows the reaction that we had in the tech stocks just recently. It fell, but it's still much, much higher than at the local top that we had in early February, early March. What does it mean? Very interesting statistic. In the US, IPOs, record level. The money that was being raised in IPOs in the US is higher than in 1999 and 2000, where we had the big stock market bubble. So what it means, the money that's being printed is flowing significantly into the stock market in the US and also in other regions in the world, creating many, many opportunities. And the money is not only flowing in the stock market, it's also flowing in the bond market. And the next slide shows you the Spanish government bonds, 50-year government bonds, and the yields. And you see the yield has almost totally collapsed to 1.3%, which of course is very, very low for a very long-running government bond, 50 years. And also it's very, very low for Spain, who's in very bad condition. The economy is suffering a lot from the lack of tourism and also the second wave. So stocks have been going up significantly. Government bonds have also increased. The interest rate has gone down worldwide, even negative in Germany. More than 10-year duration is negative. So what are the consequences? The consequences are increasing imbalances. Increasing imbalances. Here you see the target two balance in Europe, the German target 2 balance. And you see very, very nicely, perfectly, up until 2007, that the target 2 balance was balanced in Europe. And then with the financial crisis 2008, 2009, they started the imbalance, the payment imbalances in Europe started to increase significantly. And recently, in 2020, you see it very well on the chart, the imbalances kept increasing. So what we see in Europe, significant increase in the imbalances. The next statistic, I hope you can see it really well, is very tough, actually. You see the youth unemployment, August 2020, within Europe. And Spain, where we just saw very low interest rate in the 50-year government bond, almost half of all the young people have no job. And then Germany actually is leading the statistic in a very positive way, 5.8%, very, very low unemployment of young people. And you see the imbalance is increasing in Europe because the Spanish unemployment has been going up significantly, and this is the young unemployment. But also within Germany, the imbalances are increasing, and the next statistic is really tough to see who's going to university in Germany, and it depends on your parents. If your parents went to university, your probability is 74% that you also go to university. If your parents did not go to university, your probability is 21%. And of course, we know on average there's a price tag connected to it in terms of higher salaries, higher income, and higher wealth if you go to university or not. So that statistic shows a strong imbalance even within Germany, and it's actually worse in other countries where you have to pay for university. So the imbalances will increase. So what are the consequences? What's the so what? What do we do with all this data? What will happen in the future, in the near future? Well, first of all, money printing will continue. It's very clear the government programs will not be financed by tax increases or savings. And it's very clear that it's not popular, but it's also not, maybe it doesn't make sense to increase taxes when you want to stimulate the economy. How will the government finance? Money printing will continue. It's totally clear, and it has very interesting consequences. Interest rates will remain low, zero, or even negative. So the 50-year government bond in Spain might even increase further, lowering the interest rate further. And this has many, many consequences, of course, also in the economy. The imbalances will grow worldwide among the countries within Europe and within societies. And among industries, some industries will benefit from what's happening, and some won't benefit so much. And this will create more and more tension worldwide, but also within societies. New measures to finance government activities will be implemented. Well, it's very clear, all the government spending does make a lot of sense, especially when industries are suffering and should not. I mean, will come out of the crisis when Corona is over. So they should be protected from a short period of crisis. So government spending does make sense also in the startup space. So it will continue, and then there will be new, except for money printing, there will be new ways found how this government spending will be financed. And what we see, and we've seen this very well in the stock chart, and the tech stocks went up significantly compared to all the stocks. The crisis, we'll have a crisis and a boom at the same time. And that's what we see in our portfolio, in the industry, in society. Some segments benefit from the crisis and some suffer from the crisis. So it's a very, very unfair crisis. What makes this crisis very different from previous crises, which hit the economy much more evenly. So it's a very unfair crisis, and we will have a crisis and a boom at the very same time. And central digital currencies will be implemented. Programmable money, money already is digital, but blockchain-based central bank currencies will be programmable, so it will be much, much easier to, for example, implement negative interest rates. So that's the big picture. What does it mean for startups and for investors? There's a very positive impact on the speed of innovation, and innovation will accelerate even more. What we've seen in the last 7 months, much more innovation. We have an online event. We have the second online event here. We can handle the digital platforms much more better. We learned many, many tools. So things have changed faster than before. And we have learned that this change is possible, it's fun, and we can cope with it. So we will be much more open, much more positive for new change coming on, which will accelerate change. The ongoing change processes, and it's not just technology, it's also society, environment, values will accelerate. Many more women will be in the board of the big companies. We will be much more able to protect the globe. We will travel less, we will take the plane less. And we will have learned that change is positive, so the ongoing and many, many change process will accelerate. especially digital change processes will accelerate, because we need to keep the distance and we will be much more digital. Yesterday I was jogging along the Rhine, and there was a friend of mine jogging before me, and I caught up and I talked to him quickly, and he couldn't talk because he was running the Bonn Marathon by himself. The Bonn Marathon didn't happen as a usual marathon. It was basically digitized. Within 10 days, people can run their marathon by themselves, and it's being consolidated in an app, and then it's like treated as if it was one race. So even a marathon, which we wouldn't think before, will be digitized. And there will be many, many more things digitized that we, even today, maybe not being able to imagine. Huge new opportunities. Of course, all the change will create huge opportunities. And that's, I think, very important. These huge opportunities will meet lots of capital, because capital will be injected into the system, money printing of the reserve banks. So much more capital for funding and also takeover is available. At HTGF, this year is going to be our best exit year. We're going to have the largest exits, the most exits, and the most money that we return to our investors. We saw the IPO statistic in the USA. So the opportunities are maybe the best in years or even in decades, and actually more than 2 decades. The IPO statistic being higher than 20 years ago, 2000. So for you entrepreneurs, I think it's a very, very unique and extremely positive environment to capture the opportunities, to get them funded, to get the companies grow, to go public, and of course, to sell the companies. And of course, for you investors, it's going to be a unique opportunity to find great startups that capture these opportunities, make great investments, and be very successful as investors. I'm extremely positive, and all the data points to it. So that's my takeaway from the crisis. The crisis is unfair. It hits hard certain segments, but it creates a boom also in other segments, and it creates so much opportunity and so much money to fund the opportunity that we will look for in this decade, the next years, in a very, very positive entrepreneurial and investment environment. Thank you.
All right.
So now back to Guido. Guido, welcome.
Good morning, Alex. So, something has not worked out. Thanks for your very interesting analysis. Let us turn this flood of money into good business. Yeah. So, just let me say a warm welcome to our guests. By now, we all have gained a lot of experience with online events, and I think it all works very well. So I'm very optimistic that today we'll have an entertaining day. Nonetheless, I will miss the HTGF Seat Club. Yeah, having a few beers, a currywurst on the Rhine terrace of the Camilla Grand Hotel, and of course I miss these good talks in this relaxed atmosphere. So hopefully we'll be able to return to this soon. Yeah. So by the way, HTGF still invests government funds from the 2 billion startup rescue package into its portfolio and in a small number of other companies. So just to remind you if you're short on money. Okay, so today it's all about making contacts, investments, exits, just do business. So I don't want to make a long speech and hand over to Ramon. Have a successful day.
Thanks a lot. Stay in there for a moment, Guido and Alex. A few questions that we are having. EU regulations, and especially in the wider also tech scene, do you see that as a opportunity or as a threat to the, let's say, the whole ecosystem? Eh? We're still looking forward to more unicorns from European ground, but also we see the big tech and especially the platforms being regulated. So what is your take on that? Do you see that as an opportunity or as a threat or a mix?
Well, I think it's not really a threat. It's a mix. We have to take the chance out of it, and what is important is to concentrate on these things we could change. So let's work on the ecosystem. That we have enough growth capital here, that we got opportunities to have tech exits, tech IPOs. I think this is something we could work on, and so regulation comes and goes, and we have to live with it.
All right. Then one more, a little bit specific, talking about platforms. We see more and more IPO filings as one filings that include all these clauses, what can go wrong with companies. And more companies are now including the fact that they heavily depend on the distribution model of, let's say, app stores, whether Google, Apple, and other ones. We've seen multiple instances where, in this case, a private company then decides to move someone from their platform to block someone. Epic is a nice example with Fortnite. So how do you see that? And also, if we extend that a little bit throughout time, do we see multiple additional platforms coming in, delivering things, or how do you see that as a risk management factor? Because, a lot of decisions are being taken in Silicon Valley, to be sure.
Of course, these huge platforms are quasi-monopolies, very powerful, very strong, and they will extract value out of the ecosystem for themselves. But things change. They don't stay the same forever. And what makes things change is innovation. And there's many perspectives where innovation can change that model. One very good example in the e-commerce space, influencer marketing, heavily changes the model where things are sold through retail, but also sold through Amazon. Very successful way to even shortcut Amazon, which is very powerful. So a very big business are grown independently from the platform. Another technology that might significantly impact that the monopoly power of the platforms is blockchain technology, because blockchain is peer-to-peer and perfectly designed and set up for no central authority that extracts value. So I'm very positive that blockchain technology in certain segments over the next 10 years will heavily change the balance of power for startups and in the economy.
All right. Thank you a lot for your views. As always, interesting times, and indeed, you invest in people because that's what it all comes down to. Thanks a lot, Guido and Alex.
Enjoy the day.